realtor with Keller Williams Realty, Newark, Delaware. What I want to talk to you guys about is what's happening in the mortgage industry since this COVID-19 outbreak. Last week, I'm an investor, so I follow the stock market. Mortgages are tied to the stock market in a sense. When it comes down to they sell the bond, it's a bond that they actually basically sell off. That's related to mortgages. So right now, in any marketplace, you'll see the stock market going up. You'll see it's going down. The reason why that is one word. It's called uncertainty. So investors are unsure, about their money being tied into different investments. So they're pulling them and selling them off. Then you'll see a rally, and then you'll see it go down, so on and so on. So I started hearing from a couple of my mortgage guys, and they were telling me about some things that changed. And this is normal when this happens. This is not like first time this type of behavior has happened. This event is something unprecedented, though. So basically, these are some of the things that have changed. If you were a person that was qualified for 620, going forward, some people may not qualify. Your credit scores have to be higher in order to limit the uncertainty with the investors and with the money. So a 620 may now need to be a 640. 640 may, be better to be a 660. I think when you get to about a 680, 700, you're still comfortable. Some things that they're doing is they're bumping the interest rate up. Still, interest rates are relatively low compared to history, but they are bumping that up a little bit for some lenders. Another thing that they're doing, some lenders are charging what's called points. So points is like a money that's exchanged for a buy down in the rate. And then the other thing for some buyers, when a lender or mortgage company, bank is feeling unsure about you as a borrower, they'll ask for reserves. Now, reserves are nothing more than let's give an example. Your mortgage payment is going to be $1,000 a month. The lender may say we want a 6-month reserve. So 6 months is $1,000 times 6 months. You need to have $6,000 in your bank account that you're not touching. It needs to be in there the day of the loan. And then they feel a little bit more secure, because the problem right now is that people are losing their jobs. And as you see on the news, they're doing forbearance. Take a look at my video for forbearance from a good friend of mine that's a lender. I was going to explain it, but that's his role. So he does an excellent job at explaining it. But I will say this: it's not a forgiveness. Your loan is not being forgiven. So all those things are making investors feel a little shaky. They don't want to be wiped out or anything. So if you need to get your credit score up, take a look at your credit score and try to improve it. Now, the higher the credit score, the better the interest rate. That's just the way it works. So you want to get to that better credit score anyway. So a 660, 680. If you need help with that, if you need help with it, I got a team of guys that can actually help you improve your credit score. It's a small fee, but they will get the job done. Reach out to us at 302-285-9604. Again, 302-285-9604. I'm going to do a video later on that's a little bit more detailed, because I got to get back to work here. I got a couple of appointments, and I got to get some things done for some people. So also, if you're worried about paying your mortgage and you're not sure what to do, you can reach out. You can text me, and I'll give you some guidance on the steps that you should take to make sure you keep your home. All right. So take care. Have a good day, and I'll